And now let me welcome Mayuresh Joshi to the show. Mayuresh, good morning and welcome. RBI press conference through. We actually have got some more indicators in the form of more OMOs. Bond yields have cooled off. Ideally should be financial positive, but the global cues are not looking great. But from a strategy point of view, now what is the takeaway on financials? And there is anything you started liking?
Morning, Piyush. Yes, I think that key takeaways from the RBI meet in terms of the benchmarking of rates, specifically the retail advances that a lot of these banks will do out from or dole out from April 1st of the next year, obviously are going to be credit accretive. So in that sense, again, I think the liquidity issues that was plaguing the system as a whole, with OMOs announced, you're probably expected to see credit flow happening far better over the next few weeks and months. And with that respect, again, the kind of well-capitalized banks are in a far more advantageous position, in my opinion. The second element, as I said, in terms of the benchmarking of rates, again, I think the kind of impact that one really looks at, specifically in terms of how their asset liability probably comes up, and the tenures in terms of the maturities of their liability baskets. Again, the transmission was something which was a hindrance in terms of RBI's stance, but largely, again, with these policies coming through and the four broad benchmark rates, my sense is that there might be some amount of a marginal tweaking in terms of how the spreads will pan out, specifically in a scenario when rates are going down. But a large element in terms of banks which are well capitalized should probably be able to tide over this. I do not foresee a huge earnings cut happening on this front. And in fact, I think as credit flow improves, the credit growth should start picking up meaningfully, which basically means that the overall system and the banks within the system should overall improve as well. Having said that, I think the private banks is somewhere where our focus is. I think we still remain extremely optimistic on private banks.
Right.
Mayuresh, PFC, REC, the cabinet is meeting today to decide on a potential merger/acquisition. First it was REC buying PFC, now it's PFC buying REC. But essentially, how do you view this move? What does it mean for both of these companies?
So it's been to and fro, Dipanshu, all this while. And again, what actually comes through is going to be very, very interesting. The second element, obviously, is that regarding divestment proceeds as a whole, I think it is going to be some move which will probably help store up the government buffer. The third element, obviously, is their individual business models. So if you look at REC, it's more into rural electrification and so on and so forth. PFC is where I think the entire funding probably happens in terms of power generators and where the stress actually lies. Again, I think if you look at the dynamics within the segments itself, the lending probably has happened to a lot of the PSU entities, both for PFC and REC. And the private sector, which probably accounts for 15-16% in either of these cases, I think the kind of bad debts that have probably emerged over the past few quarters have probably got accounted for, and the kind of provisioning that they've probably done is probably done in the books as well. So I think it's a question on how the structuring actually happens for these companies going ahead. And the other element obviously is the existing business model. So with the existing business model still under stress, because generators, state electricity boards still are reeling under some amount of financial duress, you're still probably expected to see cash flows remaining extremely weak. And with that respect, again, I think the kind of earnings potential that they can throw out only starts happening once the situation on the macro level starts improving. So I think, yes, it's a wait and watch in my opinion. Let's see actually what comes out. But I think they are grappling with issues at this point of time on all these qualitative aspects, specifically considering the business model.
Take a look at how pharma is doing. Mayuresh, very quickly, the RBI policy is behind us. It's been more or less on track with what we were expecting. We'll talk about that in more detail in the next half an hour of the show. But if you have that as your backdrop, what are you doing with your what are you doing with your banking names? PSU banks, corporate banks, private sector banks. Is there enough reason to go and buy these? And if yes, which would your top picks be here?
So, Samina, as I discussed earlier, I think the cut is obviously going to be beneficial in terms of the liquidity available for the banks to probably start dispersing credit far more freely in terms of sectors. that they were previously not lending to. Now, the stressed out sectors that we've probably seen over the past few quarters and the kind of NBFC liquidity freeze that we witnessed, again, I think the credit quality is going to be extremely pertinent, at least over the next couple of months. But as things start smoothing out, my own sense is that the well-capitalized banks will actually have a lot more in their arsenal to probably disperse quicker and faster. The second element in terms of the two baskets that you're probably looking at, PSU banks and the private banks, in terms of SLR requirements, a whole host of PSU banks were above the mandatory limits of 19.5% anyways. But the second element in terms of the lending round restrictions that the regulator had put forth, considering the asset quality issues at their end, was clearly something which was hampering the overall credit perspective. So a large element of our stance is that the well-capitalized banks should probably benefit. The liquidity flow in the system should also ensure that credit growth starts picking up meaningfully over the next few quarters. And as you've seen from the RBI statement, the utilization levels have started moving up. The IIP data has been encouraging. The PMI data that was recorded was also encouraging, which means that as these sectors start picking up and as the private capex starts reviving over the next few quarters, I think it will be advantageous for banks who are in a better position to lend to these sectors which will be in dire need of money. Having said that, I think selective private corporate banks better position to lend to these sectors which will be in dire need of money. Having said that, I think selective private corporate banks and retail private banks is something that we remain very, very optimistic about. So I think ICICI, Axis, HDFC Bank is somewhere our belief is that should do better over the longer period of time.
Alright, going with the frontline private sector banks, that's Mayresh's call on the banking names. Thanks so much for joining in, gentlemen. Mayresh, Jay, Shrikant, Hemen, as well as Gaurav. Unfortunately, completely out of time because the management of SBI is going to join us